Okay, good morning everybody. Mike Niemiec here with some early morning grain and oilseed comments on this Wednesday, December 12th. Well, it's the middle of the week, and it's also post-USDA report. Yesterday we had the USDA come out with their S&D crop production numbers. And as we have been seeing over the past several months, the USDA report generally remains somewhat in a non-bullish environment. We saw where the USDA raised the U.S. corn and wheat carryouts, thus on the heels of exports for wheat and ethanol demand for corn. They left the bean carryout unchanged, but still a whopping 955 million tons. Then straight across the board, they also raised the carryout numbers for wheat, corn, and beans in the world. So they're being well supplied. The market, as has been the case when we get these USDA reports, has somewhat of a little bit of a sell-off and kind of runs out of steam, and that fundamental seemingly falls on deaf ears. Then we also, in lieu of the S&D reports, we also had an update on what's going on in South America, and that's our other topic that we've been watching. And once again, there too, the USDA going and talking about rebound in production in Argentina, both corn and beans, and for Brazilians corn, and a near record crop for beans in Brazil. So once again, South America up to this point with their weather forecasts on the table right now and going forward with the S&D reports, still looks like that we're going to have well-supplied corn and bean crops down in South America to go hand in hand with here in the U.S. and adding to the world supply. But as I mentioned, it doesn't seem like it falls on deaf ears. The market sold off a little bit. We went back down to pivotal price areas. In general, we've been in somewhat of a sideways trend here for the past several months with now somewhat of an upward bias. The trade continues to be enamored with what's going to go on with these trade talks. And the thinking is that even if the Chinese do take U.S. beans and put them in storage, the beans are not disappearing on the world front. So it's somewhat just a shift of where the supplies are going as opposed to usage. They even came out with a story overnight that the Chinese crushing margins are the worst in almost 18 months because of poor demand for animal feed. So once again, what are they going to do with these beans when their margins aren't good and they continue to have animal problems as far as the swine flu or fever goes? So once again, it just doesn't seem to fall with the fundamentals of us being well supplied versus money flow that continues to want to go and buy the market. Overnight tweets, we still continue to have this, what's going to happen with the trade wars? We have Trump with the tweets again. China's going to buy a tremendous amount of beans. The auto tariffs are going to be gone. We continue to get the slants. The monies that the farmers are going to get as far as aid because of the trade war has been put on hold because that department is optimistic as far as the Chinese are going to take some beans. So all in all, the rhetoric continues to go that way. And thus the buying continued in the overnight session with the beans up around 6-7 cents. The meal market up $1.50. The oil up around 15 points. Corn and wheat also firmer. And we're out there now attacking the most recent highs for the move, some making new highs for the move. We're also lightening up the net short positions in the beans on the commitment of traders reports, some in the soft red winter wheat, and they're adding to their long positions in the corn. So once again, to sum it all up, fundamentals still seemingly what we saw yesterday from the USDA continue to be a non-bullish affair. We're swimming with supplies. The demand is somewhat suspect. It's more or less a flip of the coin of what's going to happen with the trade war. These are my opinions, not that of ADM or ADMIS. Thank you.